Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn and Kansas City wheat. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Chicago corn. The dominant longer-term pattern here, one which I described 8 weeks ago when I said, and I quote, there was something that came to light by my looking at the longer-term charts for my annual review earlier in January. It is a March/October 2025 to date descending triangle pattern, and that's currently 503.5 to 543.25, end of quote. The break above the descending triangle pattern 5 weeks ago led me naming what I thought would be some very long-term targets. The primary target at 626 was easily reached, leaving a secondary, much harder to reach target, originally up off the top of my daily chart, but now sitting towards the top of my daily chart as target X in the 668 area, a lot closer than when I first named it. On top of all this, 3 weeks ago I also put forward an old technical analysis technique which worked well, which I recall worked well during the start of the Russo-Ukrainian war back earlier this decade. It is doubling, tripling, or even more of bull channels. In this case, specifically the late January to mid-February bull channel, which doubled up becomes currently 598.5 to 625 even. The upper bull channel line of this has been an interesting dynamic resistance over recent weeks, if a somewhat imperfect one. Tripling this higher, currently 625 to 652, laid out another topside dynamic resistance, but so far this has not been of any use, and I am considering retiring. Indeed, last week I drew a new, steeper, more acute dark blue bull channel for the late February to date action, currently at 625 3/4 to 673 3/4. However, this one had been good at showing the bullish angle of attack up until mid-March. Since then, well, it has been of no use, and I'll retire it after this discussion. Finally, I'd like to go back to a point I spoke about 4 weeks ago and ever since, and I quote again, then there is my final point, is again something I saw from my longer-term monthly charts earlier in January. There's a May/July 23 to date bear channel highlighted in purple on my daily chart. The lower purple bear channel line is below the bottom of my daily chart. The upper bear channel line is closer today to the market, currently 615 3/4, end of quote. Well, we've been testing the upper bear channel line for the past 3 weeks, and it has been pierced, including today, but has not as yet been broken. Indeed, it has been very interesting to see the market getting squeezed between the purple upper bear channel line and the more recent and now broken dark blue lower bull channel line. As I said last week, and I quote, something will have to give way, and I'm wondering if it might just be an explosive move. I would additionally point out a pair of 50% Fibonacci lines, one 50% Fibonacci line at 622 1/4, just above the market, another higher up, the 50% Fibonacci line for the market March 24 to May 25 move at 651, end of quote. Despite the market exiting the acute dark blue bull channel, the bullish pressure has not ceased, as we can see by the horn bottom created this week. This leads me to another point formed, or should I say forming this week. The market is seemingly angling to try and form a weekly key reversal this week. We're not quite there, as we need to exceed last week's high at 626.5 and then have a high close, but we're not too far away from it, so please look out for this as we have come towards today's close. And initially, when I looked at this, we were looking quite good, but we've pulled all the way back again since then. Chicago corn. The key pattern here, as you can easily see, is the August 25 to January 26 dark blue bullish shift pitch hook. And we are for a second consecutive week testing the dark blue upper time, currently at 481 3/4, as well as the pierced, tripled up upper bull channel line, currently at 479.5, of the original early January to early March bull channel. This brings me to my point about the bull channel and its tripling. It's an old technical analysis technique, but one I recall worked well in the grain and starch markets during the start of the Russo-Ukrainian War back earlier this decade. And that was doubling, tripling, or even more of the bull channels. I have done it here, and the tripled up upper bull channel line has been an effective resistance and cap, though I suspect this may be more to do with the dark blue upper time. Overall, this latest move higher was formed, or has formed, from the market utilizing as a base and as I said 15 weeks ago, and I quote, the important 50% absolute Fibonacci line at 425, which in turn led to the October low at 425.5, end of quote. I continued at the time when I said, and again I quote, prices seem right now to be willing to just hold and maybe test the result of the overhead seemingly formidable resistances, end of quote. Since then, the long moving average, currently at 434.5, has acted as a base of action, supplemented more recently by the November 2020 high of 439.5. This brings me to my final point, and it is something I've spoken about before. You see, I would still like to bring you a better idea of some of the larger forces at work here. So please take a look at my longer term charts now. I said back in my annual long-term video commentary published in January, and I quote, so what new feature have we seen developing through 2025? Well, I'd look to the whole 2023 to date action as a possible double bottom in formation, though I think the market's having doubts about this pattern right now. You see, to form this, we would have to move up towards the 2025 high around the 61.8% absolute Fibonacci line and the gold 5-year moving average, currently at 530.5, and breach higher, which is a considerable order to fulfill. In the meantime, we have the MOVE 3-year moving average, currently at 456.75, bearing down on the market. And as we saw in part back in February 2025, this can be a significant bearish pressure, end of quote. Well, the key feature to note here is that we have this month, with only a few working days left, breached and moved higher over the declining MOVE 3-year moving average and look like we will likely have a close above it. A considerable achievement. This does not mean that we'll straight away go up to the 2025 high at 518.75, but it does mean that we are setting up the conditions to do that. It all now depends if the market can stabilize over this breached 3-year moving average in the coming weeks, if not months. Kansas City wheat. The rise we saw since just before Christmas last year had been capped by various resistances, but it had continued to rise and formed a more than reasonable looking December 25 to mid-February 26 bull channel. After attempted breaks higher in mid-February, the market finally broke upwards 3 weeks ago. Prices pushed through the March 25 high at 628.75, but have started to stumble at the February 25 high at 642.5, especially just beyond that at the January 2015 high at 646. Beyond this, well, we have a fairly large free area up to the 50% Fibonacci line of the 2011 to 2019 move at 691.25. Then the 50% absolute Fibonacci line at 697.25, and finally the December 2014 high at 707.25. I spoke about two other features 3 weeks ago, and I would like to now concentrate on the second of these features, as the first has already happened, when I said, and I quote, secondly, and is an old technical analysis technique, but one that I recall worked well in the grains during the start of the Russo-Ukrainian War back earlier this decade, and that is doubling, tripling, or even more of bull channels. Now, tripling this higher, currently at 624.5 to 657.75, gives another topside resistance. Well, the tripled upper bull channel line has capped the market the last 2 weeks, and today. It's possibly on course to do the same. I also drew last week a steeper acute dark blue bull channel for the mid-February to date action, currently 655.75 to 720.75, my apologies. However, as soon as I drew that dark blue bull channel, the downside was broken, though I do note that we are today running just underneath a now broken lower bull channel line. I'd also note something else from last week when I said, and I quote, the lower dark blue channel line is now pressing the market up against the February 25 high. Something will have to give, and I wonder if it might just be an explosive move. Caution. End of quote. This caution still applies, and it was a pressing caution, as we are today, much like elsewhere in grain, set up possibly make a weekly key reversal. Thus, if tonight we close either over 630 or under 621 and a quarter, then we'd be on. Anything in between will have a lesser outside week. So far, we are looking at a weekly key reversal up, despite today's pullback. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.